All right. Hello, everybody. So tonight I have the pleasure to host this webinar, specially created for South Africans in Southeast Asia, basically for people or South Africans that are in China, Korea, South Korea, and Taiwan. So the reason to do this webinar was to give a little bit of information about the options that you as a South African have, some of the changes that your country is doing in terms of, in terms of taxes, residency, and things like that. And this will also help you understand what is your options in terms of financial planning, investment, and basically saving for the future. So let me start a little bit with who we are. So deVere, we belong to the deVere Group, which is a financial advice firm. We basically help expats around the world with things like retirement planning, education planning, investments, life insurance, and things like that. So we are the largest company that provides services in the world. We offer more than 80,000 clients worldwide, and we just basically are everywhere, basically. So if you are in China or in Korea or in Taiwan, then we can definitely help you, and that's pretty much what we do. So how do we serve our clients? We have alliances with one of the biggest banks in the world, and also investment products like, for example, JP Morgan, Goldman Sachs, BVA, Standard Bank, which is a South African bank as well, Old Mutual, and these are like the biggest partners we have. So let me go a little bit into the South African outlook for 2021. So why is it important for South Africans to understand what is going on in your country, in your region, and how does that affect you as an expat? So as most of you might know, COVID hit the world, of course, but South Africa was hit particularly heavier than some other countries in Africa. So as you can see in this chart, I kind of put how the economy went into a deep dive after basically March, April of last year. And we see that consumers sector and the economy overall took a major hit. And consumers is basically restaurant, coffee shops, the things that have the major impact on middle class and lower class. So that's something that is still going on. It's still very impacted. So the economy itself is still kind of recovering, but it will take many years to fully recover and to fully go back to pre-levels of COVID. So if you actually check on 2020 and 2021, you will see that even like, for example, chemicals and oil and minerals and things like that is South Africa exports, it just slightly recovered this year by maybe 5%. It's still in the negative territory, but overall, the economy is moving on exports. However, the part that interested here is actually called fixed income, which is actually taking a lot of pressure, which means that government has to issue bonds and things like that, but with interest so low, it's really hard for the government to get revenue out of this. So most people will not invest in bonds from South Africa. So that creates a major problem from the country because they cannot increase their revenues, and they will have a lot of issues getting more money out of investors outside. So it's a tough outlook for South Africa at the moment. However, it is predicted to grow this year and the following years. It's just that you as a regular person or as an expat, you will be impacting the following. So the most obvious impact, of course, is the exchange rate of the US dollar against the South African rand. So in the last 10 years, the purchase power of the South African rand has lost around 50% of its value, which really tells you like, all right, so if I'm investing in companies in South Africa, if I have a house in South Africa, even if that house is growing at 5% rate per year, you're still losing on the exchange rate, especially if you don't live in South Africa. Because if you don't live in South Africa, you're basically or either making money in euros or dollars or yuans, in case if you're in China, in Taiwan, if you're in Taiwan dollars, or Korea, if you're in wons, even though you're still subject to the dollar, which is kind of the reference. So that's a major key to understand. And this is one of the major things that I tell to my clients is you need to, I mean, it's okay to send money back home, back to South Africa, have some money saving there, but I will not put all my money in South Africa. That's what I'm pretty much trying to say. And the other implication comes last year. So last year, the government announced that they're gonna change how they see taxation for South African expat, or what they call the expat tax. So what does this affect you? Well, if you make more than 1 million a year, 1 million rands, then you are subject to this global tax on South Africans. So how does the government determine that well, you are an expat and how you're kind of liable on this? So South Africa has signed a lot of DTH, which is basically double taxation agreement with the majority of countries. So if, for example, if you're in China, I don't think you will have major issues in terms of taxes as long as you're declaring, which is probably the case. However, what people doesn't consider is that if you have a company or if you have investments or things like that, that gives you interest or that gives you dividends, then you might be subject to capital gains. And that is where the conversation kind of starts being a little bit more serious about these expats, about the expat tax. So this is one of the major things that we help clients with here in China, for example, and is with how do we plan that if we actually invest now and that investment goes beyond the million rand in the future, if I sell it, how much tax will I have to pay to South Africa, even if I'm not living in South Africa? So that's the things that most people are not aware, and that they should be aware of that, because it might be a problem in the long-term future, especially for long-term financial planning. So let me go a little bit into the part now of that, what I do, which is financial planning. How do I help expats become more wise about investments or about decisions involving money in the long term? So what is the most common challenges that we face as an expat? So if you're in Taiwan or if you're in Korea, maybe the cross-border sending money across those countries, not that a problem. But if you're in China, sending money back home from regular channels like a bank, it could be a hassle. It could be a lengthy process. You have to, very bureaucratic. So it's a little bit of a challenge. Language challenge is also there. So money cross-border is one of the biggest challenges we face as an expat. The other main challenge that I've seen is the knowing the available options. So where do we get that information that is in English, so to speak, so it's clear and that we can get actually more knowledge about what we're doing or what we can do, or what can we not do as well. And the third challenge as an expat is the long-term stability. So the problem, for example, with most of the countries that we live on, like China or Korea or Taiwan, is that most of these countries will have some security or social security in place. However, getting access to that as an expat, if you stay more than 10 years in a country, is difficult. It's not a seamless process. It could take you years. In China, for example, Shanghai has an option where the employee or the employer can decide, or can negotiate with the employee if they pay the social security or things like that. So what options do you have for long-term stability, especially retirement or pension planning? Then basically what governments are saying is you need to take control of it and you need to do it by yourself. So this is where I come in place and I help my clients. Let's plan for that. Let's do something right now. And we will help you achieve at least some of the goals that you have long-term, and we'll help you get there. So we pulled out this survey from our pool of basically clients and people we contact here in China. We've been in China since 2005. So we have a very extended pool of people, around 2,500 expats. We ask them about what is your relationship with money? What do you do with money? So most of them, 83% of them answered that they don't have, or they have very limited retirement provisions, which is very normal. And 8 out of 10 that we actually surveyed say that most of them keep their money in cash, which is also very normal because you don't know what options can you do with investment. So you usually just leave the money in the bank, which is the worst investment because money doesn't bring any returns. It's just cash sitting in a bank. So how do I plan for my clients, or how do I help them achieve that long-term stability? So basically, when I sit down with a client, I actually tell them, okay, we did this, several things we must consider in your life. So the first thing and the priority for me is to have an emergency fund. So the emergency fund is one of the things that many people don't have, and it's actually the most easiest thing to do if you really have discipline. And it's basically to save 3 to 6 months, or even if you have a family, which is bigger, maybe 1 year of expenses in a bank account in cash, so you can access whenever you need it. That is why it's called an emergency fund. Life cover, I would say, is the second thing everybody should have, because life is unpredictable. As we see last year, COVID hit, a lot of us lose jobs, a lot of people lose jobs, a lot of people got outside of their countries where they're working and communicated with families. So the unpredictable can happen anytime. So life cover is something that most people should also consider. The other thing that you should consider is also the safety, where the safety of what you invest on, the safety of the products that you will use to do this, or how do I do that? So you have to research on how safe these products are. Fortunately for us, we rely on our company a lot, and we only work with regulated products in Europe, in Australia, in all the places that we work. It's all regulated. So that helps also with the things of with like safety and security. In terms of investments, to be honest, investments can be very broad. Usually that's something that I just design along my client. It depends on the goals. It depends on each individual. It depends on your profile. It depends mostly on how do you see investments. So it would really depends when I sit down with a client to see if they have a 5-year, 10-year, or 20-year goal. So, but investments, we can actually invest in any market in the world. So, and the foreign, actually the one that I like the most is diversification. So you must have several baskets of what I like to call like several money bags. So one will be your emergency fund, another one will be your retire fund, another one will be your education planning, another one will be maybe that house that you want to buy. And that will help you keep everything diverse and maybe minimize risk and help you for the long term. So what do we look for as expats to invest in? So the majority of us, what we actually are looking for is an unique value proposition, something that gives us that value that is hard to find, that information that nobody else knows, or that is not credible. So that value must come. The other thing that we also look like when we're trying to do financial planning is investment safety and returns. So basically, like I was saying, safety is a major concern, returns as well, but as long as I think people is seeing their money grow at a rate between 6 to 9% per annum, they're pretty happy with that. They don't have a much problem with that. And basically it's more about safety. The money doesn't, well, disappear or anything like that. And client services, they want to have somebody helping them along this. They want to have somebody they can rely on. They want to see the fees. They want to see all these things. So yeah, that's something that we also will look for. So let me do a case study. So this is one of my clients. So for obvious reasons, I made up her name, but the rest of the information is real. She's a girl. She's a woman. She's living in China for more than 5 years. She has 2 kids. She's married to a British citizen, and she has an annual income over 840,000 before taxes. And her immediate needs was more about retirement. She wanted to plan for retirement. So we did some numbers, and we started with her income, their expenses. She already has a life insurance, so she's already life covered for 500,000 pounds. But as you can see, she has no retirement provisions, and she has enough cash on the bank account to cover any emergency. So she's pretty much done the first steps. She's now looking for a way to save for retirement, so long-term investment. So the way that I start with this kind is with the numbers. So I usually tell them, okay, well, your profile says you would like to have a retirement when you're 60. Okay, so what kind of income do you desire in that time? So this client actually told me, I think 420,000 rands a year is a decent income to live if my kids already grow and I don't need to pay for that and I already own a house and things like that, that's actually okay. So then you go to the finances and you say, okay, how much money do you think we need in order to grow, in order to give you that 420,000 rand per year? So if you do the math and all the financial calculations, it will drop you that you will need today around 8.4 million rands just to give you that 420,000, returning at a 5% per annum return constantly. But if you take that when you're 60, or in this case, 25 years in the future, that 8.4 million becomes 17.5 million. So there are several ways to get there. And one is by saving a certain amount of money. Like if you save money, but you don't invest it, then it will take you 58,000 rands per month, which is kind of high. But if you invest money, that number decrease. So this is just an exercise that helps people understand how much actually they do need in order to cover their retirement. And this is just one example, and many clients are different. This is why it's so hard to do it on a general basis like this presentation, because every case is very unique. So again, I'll go again with the safety of investments. Like I was saying, we only work with regulated products that have protection schemes, products that are credit rating plus A or even BBB, and they only handle nominee segregated accounts, which means that the money of the policyholders, of clients, is always separate from the life companies that we work with or the companies that we have business with. So what is the main goal for expats? So the main goals that for expats that I have found in Southeast Asia is basically retirement goals. So retirement provisions is a big concern. That's something that most clients really don't know how to do, really need to have help with. And that's something that I help a lot of clients with. Life cover, like I mentioned, that's also very, very, very common to have life covering concerns, especially if you have kids. It becomes a more concerning topic. And about real estate, that's basically when you're going into your period of time where your kids are already in maybe university, high school, and you want to do some investments in real estate and start getting some passive income, if you kind of call it like that. But real estate is something that I can help as well. However, it's not that much of a goal for, or more important for expats. Actually, the most important here in Southeast Asia that I've seen is actually retirement provisions. So I wanted to show this graph to show just how the investment, if you do it for a long-term investment, it will actually look. So if you invest in these three graphs, show three indexes: the Hong Kong index, the SP 500, which is 500 biggest companies in US, and the FTSE and the Euro stocks, which is the biggest 200 largest companies in Europe. So if you can see in the graph, the green one, which is the SP 500, is the one will give you 6 to 9% return per annum in a period of over 20 years. So the idea of this is just to show the importance of long-term investment and the importance of starting early. If you start early in the future, basically the data says it will grow around 6 to 9% per annum. So this is something that I come across because most people don't really treat or do budgeting and things like that. So I always tell clients or people that I work with, try to find a way of having a budget, allocating money, and basically start with the 20% rule of everything. So food 20%, travel 20%, and then see which one spends more and which one needs more and things like that. But do that because that will help you kind of allocate and organize your money and how you use your money. And that's very useful as well. So about the value proposition that we bring, so this is something that most of clients is, okay, so what is the value that you bring to the table? So being one of the largest companies in the world, we have very selected products that we can work with. Again, all regulated. So retirement planning options are broad, education planning is broad, investment, tax efficient investments, international bank account like the one that we offer with Standard Bank. And even we can get a local credit card with, well, this is only for China, but we can get it for whoever lives here and work here in China. So that's all for me now. I'll open a round of questions. Please, questions, it can be anything you want. And let me just stop the share. You can type the questions in the chat. And please click to say where it says to everyone. Right, well, we left, I have two questions that came before we started the webinar. So one of the question was, how do I get the maximum savings at age of 55? So that's a very general question in terms of like, it's really hard to answer that because you will have to know more information about that person's situation right now. So answering that, how do I get the maximum savings at age 55? My answer will be, you should start now, and you should start investing now as well, because the longer you wait, the harder it becomes. But I think for that question, it's a very general question, very hard to answer, because you will need more, I will need more information to actually give the right advice and right answer on that one. And there is another questions about the good investment options. Good investment options, usually, what are the good investment options? It really, really depends. So for example, if you are 30 years old, and this is really, depends on each person, to be honest. But if you're 30 years old and you wanna, I don't know, let's say the best investment decision that you can make is to start investing right now and do it for the long term, and maybe go a little bit more aggressive, or a little bit more equity heavy, which means more company stocks, because you have a lot of time. So that's what will be a good investment strategy. But again, it will depend on each person, and it's really hard to actually see what will be a good investment option, because my opinion of a good investment option can be different from yours. So I actually try to work that with clients hand by hand. All right, so